Hello, everyone, and welcome to another Wall Street from Main Street podcast. Today we have a returning guest. He's been on our show twice already, and he's one of our favorites, David Mcalvany. David Mcalvany, thanks for joining us today.
Good to be with you, John.
Great. First topic I want to get into is what you can not stop hearing about since 4 o'clock Eastern Standard Time today, the stock market closing at an all-time high. Do you think this is another reinflated bubble, or is this stock market a legitimate bull market, or is it just the Fed inflating it away?
Well, those are all great questions, John, and I think time will tell. We do know that markets go higher than they should go and lower than they should go as they're driven by greed on the upside, fear on the downside, and those emotions tend to sort of compound on themselves as time goes on. So even if your core data is changing, there is sort of a self-reinforcing social issue in play where high prices beget a larger crowd, begets higher prices until ultimately you run out of buyers. It's been very telling to watch insider selling over the last 3 to 6 months as it's been on the increase. So with increasing prices and arguably a positive outlook, if we truly are in recovery, insiders with your major Fortune 500 companies have been moving to the exits as fast as possible. It's our contention that they see what everyone on Main Street sees, which is, frankly, that the market is disconnected from economic reality, and that getting to above 14,000 or above 1550 on the S&P, frankly, doesn't indicate a return to economic health or normalcy. You can take any poll amongst folks off the street and you'll find them wondering if things are going to get better, when things are going to get better, why inflation is so persistently bothersome and continually moving higher. These are the kinds of things that are covered over by government statistics. These are the kinds of things that are covered over, frankly, by the Dow's move higher. Again, not to speak against the Dow moving higher. If it goes higher, it may add a couple hundred points more. But we would suggest that the risks inherent in the market today don't justify being in the market. The rewards are paltry in comparison to the downside. And it's a good time to be on the sidelines, in our view. Even if we missed 1,000 points, we think there's 2,000 to 3,000 points on the downside. So willing to give up a little in terms of gains because we know what it takes to make it back when you lose it. That's a lot of work.
Yeah, definitely. It looks, from what I'm seeing, it looks a little overbought too. That's some good insights too. And the main economy, I can just see it. I was at work today and we were actually talking about it. We were talking about, do you know anyone in our age demographic that has savings and investment? Hardly anyone does. And that's not a sign of economic recovery. I remember when my parents were my age, they had savings and they could start making investments. Now, most kids are in debt. That's their savings, I guess, if you want to call it that.
Well, John, you have to have increasing personal income in order for that savings component and investment component to be on the increase. And we have U.S. personal income, which plunged 3.6% in January. It was expected to be down 2.4%, so worse than expected. And, this is the reality. You can't have a blossoming economy. You can't have when people are making less money than they were before, when essentially personal incomes are in decline. So, what are we expecting the growth trend to be on the basis of? We can see the stock market go considerably higher on the basis of cheap money. But that, again, is sort of a speculative mania, not something that is based on organic natural growth. So what are you buying if you're buying the Dow at 14,000? You're buying the greater fool theory, which is that buying high and selling higher, there's always going to be the greater fool who steps in and takes your place as the person who's holding the bag. The insiders in corporate America have just handed the bag off to you, and now you're hoping that someone else comes along and takes the bag from you. That, frankly, is not a winning strategy in our opinion.
Yeah, doesn't sound like one. One thing I want to switch over to is also, instead of speaking of reinflating, is the U.S. housing market has really has blossomed. Well, not blossomed, I would say, been inflated again. What are your thoughts on it?
Well, it's interesting to see housing activity increase while mortgage activity is not increasing. So there is a funny thing that's occurring, and it is that homes that are being purchased, many of them are being bought with cash. That indicates a couple of things. Number one, that investors are in the hunt for yield and are trying to buy real estate and turn it into basically a rent property. So, just in the Miami area, we saw this last year 72,459 cash sales versus, say, just under 20,000 from before the housing crash going back 5 years. So why is there so much cash moving into real estate? Well, number one, it could be money laundering. Number two, it could also be that what we've seen driving the markets in places like Phoenix and Las Vegas is private equity capital stepping in, reducing the total stock of homes, the overhang of homes in terms of supply, and that's very helpful. But ultimately, it's not what we would derive a conclusion that in fact we're in a recovery in housing. It's stabilized, but I think we'll probably bounce along the bottom for several years. There's no real catalyst for growth in the real estate market. Again, you look at the purchases related to mortgages, which is more typically your kind of purchases that we saw circa 2005, 6, and 7, and originations last year, 123 billion compared to 226 billion 5 years earlier. Quite a change in terms of the complexion of the housing market. Again, conclusion, investors are in the hunt, and maybe some illicit funds too. And we see a lot of illicit funds, not necessarily derived or avoiding U.S. taxes, but a lot of money coming from China. We see this in Singapore and Hong Kong. Their real estate markets are very hot and heavy, but it's cash purchases coming from the mainland. The Treasury Department was doing studies starting in 2010, and the amount of illicit funds coming out of the Chinese system. Of course, they have capital controls. You're not supposed to bring funds out of the country, but the Treasury tracks those things, and it began to skyrocket. Real estate in those spaces was moving higher. Wouldn't surprise us to see Southern California real estate, Washington real estate. We've already seen a major boom in places like British Columbia, Vancouver, BC area. If you looked at the number of houses bought by Canadians versus Chinese, I think you'd see the vast majority in the last 24 months were bought by Chinese. Kind of an interesting shift, but again, cash purchases. You got people trying to hide money. Frankly, that's what's driving the real estate market today. That's not really an economic recovery or a housing recovery.
Yeah, I definitely agree. I'm actually hearing from other people too that a lot of people I've been reading, a lot of people from China are buying in New York. We have some consulting clients in California, and they're saying that a lot of people from China are buying the California market too. So are you reading that a lot of the U.S. purchases are coming from foreigners rather than Americans?
Well, I think some are. Whether it's the majority, I don't know. But that is, I guess, what is worthy of note is that the complexion of the purchasing is different, and whether it's sustainable or not is the real question. Because if we've turned the corner and we are in fact in recovery, then we're dealing with sustainable trends. And we would argue at this point that, again, you've maybe found the bottom, but that's very different than actually being in a recovery mode where we can expect to see healthy growth rates heretofore.
All right, and speaking of housing, I want to switch over to China, where the recent news is their manufacturing has shrank and they've passed property curves. And I think the manufacturing shows just how weak the Western economies are, because their main exporters are Europe and America. And, the only reason their manufacturing could be shrinking is because they're exporting less to the Western consumer, as I call it. What are your thoughts? And then the property curbs, is they trying to cool off the housing bubble?
You're right, John. I think when you're dealing with the flow of goods, the end destination, the majority of their goods are coming to Europe and the U.S., and the consumer is on hold. I mean, again, we'd like to argue that we're in recovery, but everyone who's looking for that story is sort of looking at the very surface level, superficially. If you look beneath the surface at all, again, incomes are not rising. Personal consumption is challenged at best, and with that in mind, it's not a surprise at all to see Chinese manufacturing fade. Real estate there, again, you've got money that's trying to hide from the overall system. The shadow banking system continues to grow in China, and you've got very important families that have made literally hundreds of millions, even billions of dollars in the last 10, 15, 20 years in China, and they're trying to take their money and move it underground. Part of that's out of the United States, and a part of it is cash purchases for real estate. An overheated market there, for sure. an overheated market for sure, and thus the actions to try to curb the property bubble. Most recently, the suggestion of a tax, 20% tax on real estate liquidation. So basically, a capital gains tax on all liquidations. When and if that's implemented, that'll tame some of your second, third, fourth home purchases as speculative ventures.
All right, and I actually want to move over to another topic. Is everyone talks about the sequester, and what I'm actually seeing somewhat is people are realizing that I think this is actually backfiring because Obama acted like it was the end of the world. We would be waiting forever in the airports. It just goes on. And are you surprised that it hasn't taken any effect on the market at all, or is the market just ignoring it and thinks it's BS?
Well, I think if there's anything that's BS, it's the grandstanding by Obama about how terrible this is and how it's the Republicans in Congress that are bringing us to yet another fiscal disaster, when in 2011 it was from his office that he said, we're not budging on the sequester, it's absolutely necessary, and we're going to take a hard line on it. And that's our plan, that's our protocol. So, I mean, like any politician, Republican or Democrat, what we see is duplicity, we see deception, we see a change of masks, if you will, in the middle of the play. I just don't appreciate politicians in general. Nothing against this particular administration. I just think they're all scoundrels. What we see with sequester, though, is that really, in terms of an impact on the economy, the amount of money that we're spending, John, in terms of deficit spending, money that we don't have, I mean, these are bigger issues. We've got long-term liabilities, let alone the current stuff, totaling close to $17 trillion. Long-term liabilities that pencil out, depending on what you want to throw into the basket, a minimum of $120 trillion, as much as $220 trillion in terms of future liabilities. That puts our gap. If you're counting our deficit in generally accepted countable principal terms, at about 6.6 trillion, not 1.1 trillion. So gap-based deficit is 6.6 trillion. That was for 2012. These are your killer deals. These are the issues we need to be focused on. 85 billion, saving 85 billion because of the sequester, having that cut. I mean, come on. Again, this is politicians playing for advantage. Most of whom don't realize what a dire situation we're in. We've got foreign creditors who at some point are going to pull the plug on $1 in their treasury holdings because they lose confidence in these goofball clowns in Washington who can't get their act together and do anything fiscally responsible. Sorry to be as disrespectful as I am, but it's just
you're not being disrespectful. I like hearing this actually. So
the reality is they're fiddling while Rome's burning, and that's something they'll have to live with in terms of their political legacies. They had the opportunity to act, and they played politicians instead of acted like statesmen. Fiscally, we've got a train wreck coming, and they need to get they need to get to work. Nobody is getting to work. Nobody. And so the sequester, yeah, it's an issue, but it's not a major issue in comparison with everything else looming out there.
Yeah, well, not only that, it's not even cutting spending. From what I've read, it's just cutting the increases. That's all it is. We're still increasing spending. It's just cutting it.
Remember, that's what Congress considers heavy lifting.
Yeah, that is true. It's but of course they always say they're physically they want to get work physically and settle reform. Of course, I don't know what they're trying to reform, but what's amazing though is despite all this is gold and silver. I can't talk to you without talking about gold and silver. I was watching CNBC for a little bit just before I contacted you, and it's unbelievable the sentiment about gold and silver is. Does this look like a bottom? I think just sentiment-wise, it looks like a definite bottom. No one wants in.
You know, sentiment can get a little darker and a little nastier from here, but I think, you know, this is typically what you're looking for in any sort of market bottom. It doesn't matter if it's gold and silver or real estate or anything else. When it's despised, when it's rejected, when no one's thinking about it. I mean, keep in mind, September 2011, there was a poll done by Gallup which showed that 34% of Americans believed that gold was your best long-term investment. Now, keep in mind, this was also within a 30-day window of it putting in an all-time nominal high. All-time nominal high, and people are praising it. Now it's at lows, and they thought that it was a quote-unquote long-term investment, the best long-term investment. I would guess if Gallup did the poll today, you'd find less than a 5% response. Why? People don't know how to invest. People don't know how to control their emotions in the context of investing, and people are very happy when the price is moving up. They're very sad when prices are moving down. This is where, I think a stable long-term investor buys when there's blood in the streets and sells too soon. That is not what most people do. They're looking at prices in gold and saying it's going down and it's going downer. Again, bad English, but this is the state of affairs. People don't believe it because it's not trending in the right direction. We look at the fundamentals, see them as being very stable, very strong, and the price break. Yeah, we had a psychological price break from about 1640 down to current levels. And we could see it shave another $50, $60, $70, but we're in a bottoming phase, and I think a smart investor is adding to positions. I mean, we've been in this business for 40 years. We've dealt with tens of thousands of clients all across the country and have a pretty good idea of what sentiment is. Sentiment today, yeah, it's fairly negative. I would say, though, John, that it can get worse, and it's likely to get worse over the next 3-4 weeks. But after that, I think you better be invested. If you haven't invested, if you're not investing in this kind of a time frame, you really are missing a pretty phenomenal opportunity.
Well, not only that, just speaking of the fundamentals, this is the first time. James Rickard wrote about this around 2010, 2011. I forget which year exactly it was, because I started reading it, December, January period. So I don't remember the exact year they had it officially published, but he talked about currency wars. And now they're openly talking about currency wars. Brazil just said they surrendered. And what do you think about they're actually openly talking about currency wars?
Yeah, the world's divided into two camps. The two camps are those who acknowledge that they're participating, and those that are participating but won't acknowledge it. I mean, and that's the reality. Central banks and monetary authorities the world over, everyone's in the game, and that is everyone's in the fight. It's just a question of how honest and transparent they are about how they're playing the game.
All right, and just one more thought is I was wondering, two metals I'm actually really bullish on for different reasons is platinum and palladium. What are your thoughts on those metals? I'm always going to be a little bit more inclined towards the gold and silver trades. Platinum at the right price would make some sense, and it just depends if someone's playing the palladium-platinum ratio against each other. There's definitely a trade to be made there, but that takes sort of a long-term commitment and an interest in intermarket arbitrage. So yes, it makes sense for someone who's going to take the time to be involved. If someone's just playing the price game, then I just own as many ounces of silver and gold as you can and forget about it. All right. And if our listeners want to find out more about you or how you can do things, how can they do so?
Mcalvany.com is the best place. That's McAlvany.com. We just released the third in a series of short films called The Fuse is Lit. This last one is called The American Reckoning. If you want a physical copy of that sent to you, it actually includes the first two we did earlier in the year, one on Asia called Asian Ascendants, and then the one before that was dealing with Europe. So a great little three-part series, about 20 minutes in each part. And if you want to request the DVD, we've just had to order another 20,000. So there's plenty of those copies that will be in-house within the next week to 10 days, fresh off the press. And that'd be a great way to sort of get a big picture view on the rest of the world, investing, et cetera. So McAlvany.com, and just request the Fuse is Lit DVD series.
All right. That sounds great. Thanks for coming on. We're always happy to have you.
Thank you, John. Good to be back with you.